In this video, we'll talk the differences between debit and credit cards and find out which one is better for you. Let's kick things off with some fundamentals. A credit card lets you borrow money from the bank up to a certain limit to make purchases or to pay off debt, with the understanding that you'll pay it back later, preferably with a little thing called interest. Credit cards require a separate application and you don't even need a bank account with a card issuer. It's like borrowing cash from a fancy lender without being too tied down. A debit card, on the other hand, it's like your bank's account best friend. Bank issues debit cards to their customers so they can make purchases or obtain cash without having to write a paper check or visit a teller at the bank. When you swipe it, the money comes directly from your checking account, which means if you don't have cash, well, the card is not bailing you out. Debit cards can be used for withdrawals at automatic teller machines or for purchases from retailers in-store and online. The money comes straight out of your account almost immediately. So if you don't have enough money on your account to cover that transaction, expect that awkward card rejection moment at the checkout. Yeah, you know the one. Rather than being linked to a bank account, credit cards have a credit line that the user can borrow against, usually up to a certain preset limit. You can use it to get cash at ATMs too, but those cash advances? They come with a side of hefty fees and high interest rates. To get a debit card, you typically need to have a checking account with the bank, unless you've got a prepaid debit card. There are also often minimum age requirements, although this can vary by institution and account type. Most banks will hand you debit card when you open an account, kinda like a free pass to spend your own money. But if you want a credit card, it's a little more complicated. Credit checks, income verification, and your credit history all play a role in the process. Got a thin credit file? You might be better off with a secured card where you put down the deposit that doubles as your credit limit. Think of it as a training wheels of your credit journey. With the credit card, you are borrowing the bank's money to make your purchases. It's like getting a short-term loan every time you swipe. You have a grace period before interest starts piling up, usually around 21 to 25 days. But watch out for that future you mentality where today's spending becomes tomorrow's headache. $200 for a blender? It's a future miss problem. Yep, that one. Debit cards? No borrowing here, just using your own cash. It's like paying from your own stash, so if the funds aren't there, neither is your purchase. Simple, right? So I guess no blender, huh? Here is where the things get a little spicy. Credit cards come with interest charges if you don't pay your balance in full each month. That $5 coffee could end up costing a lot more if you're paying 20% interest on it. And let's not forget those sneaky annual fees or late payment charges. Debit cards are way simpler when it comes to fees. No interest here, but that doesn't mean they are completely free from costs. Some banks may charge overdraft fees if you try to spend more than you have, so you still may face those ouch moments at the ATMs. Both debit and credit cards have security features, but credit cards usually step it up a notch. Credit cards come equipped with fraud detection systems, CVV codes, and good old EMV chips to protect you from sneaky fraudsters. Many come with fraud detection systems that alert you to any suspicious activity on your account, and your card issuer may contact you to verify any questionable transactions. You can enhance your security by enabling additional transaction alerts or using features like Easy Lock, which temporarily disables your card until you unlock it again. Plus, some cards let you create virtual numbers for online shopping, so your actual card details stay under wraps. Debit cards, on the other hand, rely heavily on PIN numbers and signatures for security. And they do have fraud protections too, but it's not the same level of fortress of solitude that credit cards offer. Now here is something a debit card can't do: help your credit score. Using credit card responsibly by paying on time, keeping your balances low, and not applying for a million new cards all at once can help you build a good credit. And a good credit score means better interest rates on loans, easier time getting approved for an apartment, or just bragging rights at dinner parties. Debit cards, they don't affect your credit score at all. They're not building credit history. So if you're trying to boost your credit score, your debit card is just hanging out in your wallet like, I'm here for you, but don't expect me to lift a finger. I'm more like a spend and forget kind of card. When it comes to fraud protection, credit cards are the champs. Under the Fair Credit Billing Act, you're only liable for up to $50 if someone goes rogue with your card. And many issuers offer zero liability, meaning you might not even have to pay that. Debit cards offer some protection, but it depends on how quickly you catch the fraud. Reported within 2 days and your liability is limited to $50. Wait longer and you could be on the hook for up to $500 or even more, so keep an eye on that account like a hawk. Credit cards often come with some sweet perks. Whether it's points, cashback or travel miles, you basically get rewarded for spending. But here is the catch. Those rewards only make sense when you are paying off your balance in full. Otherwise, interest will eat up those free rewards faster than you can book that flight. Debit cards, they're more straightforward. Some banks offer rewards on debit card purchases, but it's rare. If you are trying to stay within a budget, debit cards are like personal trainer you cannot ignore. Since it's your money being used, it's a lot harder to overspend. Credit cards, well, they can make budgeting a little slippery. Since the money doesn't leave your account straight away, it's easy to lose track and overspend. It's all fun and games until you get the bill by the end of the month and realize, oh, I have to pay for all of that? Let's go through advantages and disadvantages of both card types to help you choose which one you want to use. Credit cards are a powerful tool for enhancing your credit score. This is crucial for many financial decisions like securing loans, renting an apartment, or qualifying for better interest rates. While no two credit cards are identical, even some cards designed for individuals with bad credit can provide rewards on everyday purchases. Additional perks may include welcome bonuses, 0% APR promotions, shopping and trip protections, and travel credits, among others. Credit cards typically offer better fraud protection than debit cards. If someone steals your credit card information, disputing and reversing fraudulent charges is often easier without jeopardizing your funds. Credit cards give you the flexibility to buy now and pay later, usually with a grace period before interest accrues. And this can be beneficial for managing larger purchases or navigating short-term cash flow challenges. Having a credit card can serve as a safety net for unexpected expenses during emergencies. With a debit card, you are not borrowing, so there is no risk of accumulating debt or paying interest. This can help you stick to your budget and avoid the financial stress of high-interest payments. Debit cards are a good tool for maintaining control over your spending because you're more likely to stay within your budget. This can help prevent temptation to overspend, which can often be an issue with credit cards. Many banks offer overdraft coverage, allowing your transactions to go through even if your account balance is slightly short. However, keep in mind that this may come with overdraft fees. Debit cards don't require a credit check, making them accessible for people with poor credit or no credit history at all. This makes it a good option for those who are looking for a simple, accessible payment method. Now, talking about disadvantages, with a credit card, if you don't pay off your balance in full, you may incur high interest charges on your outstanding balance. Additionally, credit cards may come with annual fees, late payment fees, and penalty APRs if you miss payments. Since credit cards don't require upfront payment, it's easy to lose track of your spending. The convenience of borrowed money may tempt you to purchase items beyond your means, leading to unmanageable debt. While credit cards can help you boost your credit, irresponsible use can damage it. Maxing out your credit limit, late payments can negatively impact your credit score. Credit cards often come with intricate terms and conditions, making it essential to thoroughly review your account agreement. With debit cards, if your card information is compromised, you may face greater liability for unauthorized transactions, particularly if you don't report the loss promptly. Additionally, recovering lost funds can take longer since the money is withdrawn from your bank account, potentially leaving you without access to your cash during the dispute process. Many banks place spending or withdrawing limits on debit cards. While this adds a layer of security, it can be inconvenient if you need to make a larger purchase or withdrawal and exceed your daily cap. Debit cards do not help you build credit as they are not reported to the credit bureaus. If you are trying to establish or improve credit, debit card use won't contribute to your credit report. If you spend more than what's in your account, many banks will allow the transaction to go through but will charge you hefty overdraft fees. Some merchants, such as gas stations or hotels, might place a hold on a set amount of money when you use your debit card. This can temporarily reduce your available balance until the hold is lifted, which can be frustrating if you're running low on funds. It is important to understand your situation and goals to determine which card is better for you. Here are some considerations. Spending habits. If a line of credit would put you at risk of overspending, you might be better off with a debit card. However, if you have no problem sticking to a budget, a credit card could reward you on your everyday spending. Access to cash. If you prefer using cash, a debit card allows you to withdraw your money from ATM or local bank branch without incurring credit card cash advance fees. If you prefer to stick with cards, either option still works for your purchases. Credit goals. If you want to work on building your credit history or maintaining a good credit, a credit card is your best bet. Fraud protection. Even if your debit card offers zero liability fraud protection, unauthorized purchases can impact your ability to pay other bills until the funds are restored. If you want maximum protection from identity thieves, a credit card may be the answer. I'd say if you're looking to build credit, enjoy rewards and can pay off your balance in full each month, a credit card is a powerful tool. If you prefer staying on budget and want to avoid interest charges, debit cards are a great option. At the end of the day, whether you're team debit or team credit, the important thing is being smart with your money and knowing what works best for you. So let me know in the comments what's your go-to card, and share any funny or not so funny experiences you've had with them. In the next video, we'll find out how to use credit cards responsibly and avoid debt. Thanks for watching.